Let's also welcome on board Ajay Bagga then. Ajay, hi, good afternoon. Good to be speaking with you. And after a long gap, Ajay, how is it that you're maneuvering through these very uncertain times? Yes, we've got a domestic trigger finally in place and earnings is kick-started. But the global uncertainties remain. What's the best strategy right now for investors?
Thanks, Aisha. Thanks for having me again. Overall, if you see, we are in a tight range, and Indian markets have been subdued. We have been underperforming, and even if you look at today, we have U.S. futures up. Europe is doing well. We saw Hong Kong and China close up, and Australia hit an all-time high. So nothing very wrong in the global scenario. We are actually not seeing the flows from the FPIs. That's one big reason, more because of our higher valuations and earnings being underwhelming. So the catalyst has to come domestically. I think the global issues are more or less getting sorted out. We will eventually walk into a 15 to 20% tariff deal with the US. That's baked into the markets, but there would be some relief there. We thought this year would be a more domestic sectors year. That is playing out, but bank NPAs going up has been one issue, and now we are waiting for the big banks to come in to really see. Shaktikant Das had called this out last year, and when he put some kind of brakes on the unsecured consumer lending. Now it seems to be rearing its head. We are hoping it's a one company kind of an issue and not industry-wide. That is what is spoiling the sentiment today for the banks, that how much of a morass is the unsecured consumer lending in. Remember, we have seen quite a bit of write-offs on the microfinance or the subprime book. So those have seen some cuts, those have got digested. These numbers are not really earth-shatteringly bad. It is a slight slippage happening on the unsecured consumer. But the issue is, how is the trend? What is the trajectory? And is it industry-wide? I think those are the big questions. And those will get answered over the next 2 weeks.
Mr. Bagga, hi. I was reading something that you've recently written about the tariff impact that we're seeing play out in the US, and a trend that you have pointed out is de-inventorization. That's taking place in the US right now. It's affecting export-import players, the end consumers, and the entire retail basket. Do you believe a similar theme could play out here if we see a little bit more uncertainty with our deal with the US?
Is that the exporters are seeing the uncertainty, and even IT. IT, if you see, is correlated with the US macro. It's not correlated with the US rate cuts. There's a very low correlation. So IT moves when the US economy is doing well. Now, on the face of it, US economy had a negative print on GDP in the first quarter, but that was because they front-loaded the imports. So imports had a -3% drag that brought down their entire GDP. Second quarter, actually, the US economy is looking at a growth of 2.5 to 2.7%. That's why we are a bit surprised that our IT has not got better orders. Now,
I guess we have snapped that line with Mr. Bagga, but we'll try to fix that and get once again his take on the IT space and some of these export-related sectors. But meanwhile, let's shift focus to Greenlam Industries, as the company has announced that it is making an investment of 1,147 crore rupees in Andhra Pradesh to set up high-pressure laminate particle board manufacturing facility. Ashesha is here with more details on this one. Take it away, Ashesha.
Well, yes, Greenlam Industries is in focus as the government of Andhra Pradesh has approved setting up South India's largest laminate facility in Andhra Pradesh. Now, remember, this will be done with a total investment of about 1,147 odd crores, and the Andhra Pradesh government will also be providing some kind of incentive. They said that Andhra Pradesh government has approved incentives worth nearly 329 crores, which is nearly 30% of the total project cost. Now, as far as the capacity of this project is concerned, concerned, facility will produce nearly 7 million sheets of high pressure laminate per annum and about 2.9 lakh cubic meters of wood based particle board sheets per annum. So this is the kind of capacity this project will have in Andhra Pradesh. Now remember, Indian home decor market is huge and it is expected to grow going forward. In 2023, the total market size stood at about $33.5 billion. This is expected to rise to nearly $41 billion by 2028, implying a CAGR of over 4% over the next 4 to 5 years. Rising living standards and increased consumer expenditure on home decor items are the likely factors which will drive home decor market going forward. So yes, Greenlam Industries is in focus on the back of this 1180 crore capex announcement that has been announced, and Andhra Pradesh government will be providing nearly 30% of the total cost as incentives to the government.
Okay, so that's the take on that. And Natasha, thank you so much for joining us with the update on that stock. But let's get in some closing ideas from our technical experts. Vinay, you go first, and where are you placing your BTST trades for the day?
Yeah, so very few stocks are there which are doing well. So in this kind of market, FMCG is the space where we see some opportunity in the short-term trading side. So Nestle is the stock which has actually broke out yesterday from the consolidation, and the FMCG as a sector has been doing well. And whatever quarterly update has come, it has come out very positive. And after that, we have seen that most of the FMCG stocks rallied. So Nestle could extend its gains from here around 2468. One can go long. I would suggest a stop loss at 2420. On the higher side, I'm suggesting a target at 2550 for the trading for next 2-3 days. The second pick I would take from the another sector which is outperforming today is the metal. So from the metal, Jindal Steel and Power looks good to us, and that setup is quite nice. It seems that it is breaking out from the consolidation. So Jindal Steel, one can go long around 960. I would suggest a stop loss at 940 for the trading. On the higher side, I'm expecting a target of 999. So overall, FMCG and metal, these two sectors can do well in short term.
Right, interesting. That's the take coming in from Vinay. But Saumil, what about your stock strategies?
Hi, my first strategy is to sell Eternal, a short call on Eternal. Upward sloping trend line has broken on the downside, closing below 20 and 40 daily moving average. Negative setup for the stock. Momentum indicators are on the sell side. Stop loss would be 263, and the target should be 245. The second stock is IRCTC. Low top, low bottom formation, resistance at 200 daily moving average, trading below 20 and 40, a negative setup again. Stop loss would be 781, target would be 745.
Mr. Bagga, you have already shared take on the banking sector, but with the earnings season in full swing, we have already seen that disappointment coming in from the IT pack. Help us understand that sectorally, any particular pocket that is looking good to you right now, where you are building hopes for a better number maybe?
I think cement, you will see good numbers. Rest is looking a bit disappointing. So the good news is most of it is in the price. So it has got factored in already. We don't expect major cuts in this market. Here on, the global situation is much better. One catalyst will be a deal, tariff deal coming through finally. That will be one catalyst. Second will be
Snapping that line a little too often. But let me take it across to Saumil. And Saumil, highlight the charts of ICICI Bank for us ahead of the numbers over the weekend. You're seeing a sudden spurt up in the counter.
Yes, actually a little surprising. It has taken support at the lower end of the Bollinger Band, and it has spiked very surprisingly. It has a resistance of 20 and 40 daily moving average, which is around 1431. So I'll still wait for a breakout about that level. Overall, if you see, there is a big range forming for ICICI Bank between 1400 and 1450. So this 50-point range is where this counter is consolidating, and I'm expecting this consolidation to continue. Overall, if you see HDFC Bank, Other banks are not looking that great, and ICICI Bank would remain in this range. So I'm a little negative on Bank Nifty as well, because it is trading below 20 daily moving average as well.
Check, but while we're talking about some major earnings, all eyes are going to be on Reliance as well as Reliance Jio later today. Both of them expected to come out with their set, and in fact for Reliance we're expecting it to be a good quarter this time around, because the oil and gas conglomerate is expected to report good show, with profits expected to jump as much as 14%. Ashish is joining in to let us know and in fact highlight what we can expect from the earnings of both Reliance as well as Reliance Jio. Ashish.
Well, yes, for Reliance Industries on a consolidated basis, we are expecting net revenue to come in at 2,45,700 crores, which will be a marginal drop of about 6% on a sequential basis. But on the flip side, on the bottom line, we are expecting an uptick. So EBITDA could surge by about 2%, and margins are expected at 18.3% versus 16.8% that the company had reported in the previous quarter. Now, as far as segment-wise performance is concerned, retail segment's EBITDA could decline by about 2%, but on the flip side, the other two segments, the oil to chemical segment and digital services segment, these segments are likely to report an uptick in EBITDA. Digital services EBITDA is likely to rise by about 4% QOQ. This is on account of telecom segment price hikes that the company had reported in the last quarter, and the entire benefit of this telecom price hike is likely to flow in this quarter. Meanwhile, as far as the other segments are concerned, oil to chemical EBITDA could rise by about 5% QOQ, and this will be on account of higher margins in this quarter. Now remember, management commentary on the 75,000 crore investment in new energy that they had announced last year will be crucial. Management commentary with respect to retail segment store addition and telecom price hike will also be keenly awaited. Well, yes, we are expecting strong set of numbers for Reliance Jio this time around. We are expecting revenue at 31,100 crores, which will be an uptick of about 4% QOQ, and margins are likely to be largely steady at about that 53% mark. But remember, our average revenue per user is likely to rise by about 2 to 3 odd % QOQ. It came in at about 206 rupees last quarter, and that is expected to inch up higher to 210 rupees in the first quarter of FY26. As far as subscriber addition is concerned, that is likely to pick up pace. Remember, Reliance Jio added nearly 6.5 million subscribers in the last quarter. It is likely to add about 9 million subscribers in this quarter as well. But management commentary with respect to ARPU growth, tariff price hikes for the telecom sector and for Reliance Jio, and any commentary on subscriber addition will also be crucial. But all in all, strong set of numbers expected from Reliance Jio.
Okay, strong set of numbers, and that's something that the street is only going to react to come Monday morning. But Saumil, what's it looking like for the market? Do you think the range will get established a little bit lower come next week or not quite?
Yes, absolutely. I think we've already started. Nifty has already started making lower top, lower bottom. Last week on Thursday closed below a very crucial raise support at 25,330 and closing below 20 daily moving average. So that was the first sign of reversal, and we started forming lower top, lower bottom. Today was the confirmation, closing below 40 daily moving average. All the major stocks like ICICI Bank was forming low tops, low bottom, but just spiked up. But HDFC Bank, Reliance, all of these stocks are looking a little negative. Bharti is looking a little negative. So large caps overall are looking negative. Some of the mid caps have started giving up the gains as well. Autos are looking a little negative. Hero MotoCorp has given up all the gains. So I think overall, in the very short term, the markets are looking negative, and I'll be expecting a 24,700, 24,500 levels in the short term. But the medium term still remains positive. So I'm not expecting markets to goes below 200 daily moving average, which is around 24,100, a little deeper. But overall, medium term still remains positive.
That's the near and medium term outlook on the markets, and not looking all that bad, at least in the medium term. Saumil, thanks so much for joining us and speaking to us at ET. Now, on that note, we'll let you go.